we've got Peter Maguire, who's joining us with his view on commodities.
Yeah, well, let's get Peter in on the show. Peter, good morning or good afternoon to you already. Thanks for joining in. A bit of a yo-yo there for crude, 4% fall overnight and then a bit of a recovery, but it still hangs in balance there. What's the sense? It just seems, Peter, that despite geopolitical stress, upsides in crude are being sold into because of demand woes.
Absolutely. Good morning, Niraj. I mean, it's very exciting. If you're putting it on a volatility chart over the last 30 days, if 1 is the lowest in volatility and 10 is the highest, WTI is sitting at 9. It's been extraordinary over a 3-week window, 67 up to 77 and back to 70. We've had $17 worth of moves, as Samina mentioned, in 3 weeks, which is just extraordinary. Great for traders, hedge funds, and of course, anyone, that's playing the market or trading the market. So I feel as though there's probably further downdraft. That geopolitical tension as the war premium has been stripped out, but you can't, I suppose, discount the fact that Israel could in turn act in some capacity against Iranian fields. No one knows what their strategy is. So that's always an unknown at the moment, Niraj.
Okay. Peter, so the question really is, if you were tactically looking at crude, would you believe that if Israel's actions are not targeting Iran's crude facilities, there is a higher probability of crude prices staying subdued at circa 70 or below versus they're moving higher? Would that be a fair assessment?
Well, yes, it would be. I mean, you've also got to take in consideration over the last couple of weeks that US dollar to the move to the upside has been very, very strong. The index sitting at 103.2, 103.3. So, yes, I think there's further downdraft. And if there's no war premium or geopolitical concerns, Niraj, then yes, 67 could be where you could see a little bit of a resistance. But at the moment, or support, you should say. And we've just got to see whether that, the numbers, as you say on the screen there, IEA revising forecast moving forward. So, it's could be a very interesting Q4 to trade the energy complex. You've just got to see where we see support and what the other points of view come into play.
Well, hi, Peter. Good morning. Thanks for joining in. OPEC has indicated, or rather revised their demand outlook downward. Do you anticipate that in the next couple of weeks, we could expect OPEC Plus to play a role in stabilizing the disrupting sort of supply chain and, of course, slowing demand? Because $67 a barrel doesn't keep any of the suppliers happy.
No, Samina, no, it certainly doesn't. Good to see you. I think that's the issue at hand. You've got a meeting towards the end of November, traditionally with OPEC and OPEC Plus. So we've just got to see where that runs over the next 6 weeks. Their focus naturally is on higher prices. That can't be disputed. There's plenty of oil out there, but you've got waning demand, as we've noticed, a revision down as far as global demand, and of course, what's happening, in the short term with China. Also, the opaqueness of their policy and what they're prepared to do from the property sector. So all of these factors need to be considered. And at the moment, it's a fantastic market to trade from a volatility standpoint. But where price swings to, well, that's always the unknown. It's a wild market.
Indeed, wild. And if it's $67, $70 a barrel, with an impending rate cut in the US, with geopolitical risk still very heightened, demand in India not too bad, maybe some stimulus coming in from China, would you recommend going long on crude at the current market price for the next 4 to 6 weeks?
Well,
or till the end of the year?
Well, yeah, I got to say yes, but if I look at over the last 3 weeks, Samina, you've seen a $17 move, both from 67 to 77 back to 70. I wouldn't be surprised it goes back to 80 if you've got some, uneasiness geopolitically. And I feel as though possibly 67, 65. So I think it's going to be bullish in the short term because of these unknown factors that can play into the market at any time. You've also got the election coming up in the States and the US dollar strengthening. So if that comes under a bit of pressure and sell off as far as US dollar with a hefty rate cut, then that could change the dynamics of the WTI and Brent as well.
Right. Peter, very lastly, you also track commodities beyond crude. What is the outlook? Early this week, commodities on the LME were trading much higher. Tuesday, they took a bit of a break. This morning, I'm not sure what the reading looks like. But if you had to have two calls, bullish and bearish, what commodity would you pick for each universe?
Well, I like copper, Samina, it's running at around about 95.30. It's well off its $10,000 that we saw recently. It's sold off on the LME 1.35% in the last session. So I feel as though that's probably being downdrafted alongside crude. So I think it's going to be volatile. Keep an eye on copper. That's one thing that I really like from a base metal, but my focus probably more so is on the yellow metal, and I think silver and gold are going to be extremely hot over this quarter.
Thank you, Peter. It's always such a pleasure talking to you. Great to get your perspective, not just on crude, but other base metals as well. Of course, we'd love to chat with you about gold too, but maybe next week before the run-up to festive season back home.